The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 2nd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary afternoon, morning, evening, wherever it is that you are in the world. And we do thank you for being here. Of course, the easiest way to make sure that we have an extraordinary day is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to take a look at the circumstances of the Bulls and the Bears, what they're communicating to you and I. I'm absolutely grateful for your presence here. I'm here to serve you. Feel free to pick up that phone. Dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Wonderful Wednesday. Of course, it is Tiger Finance News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 178 points. That's trading at 16,237. S&P's up 18 points at 1932. NASDAQ Composite up 55 points at 4691. Russell's up about 7 points at 1134. The DAX finished up 32 points. The FTSE up 24 points if it was open. It must have been. You've got silver trading up a nickel. Gold's back $5. Light sweet crude down 52 cents. Leading the charge to the upside, it is Chipotle on fire. I don't know if it's really on fire. It's up $13, a little under 2%. Priceline up $13, a little over 1%. Biogen up $9, 3% to the upside. Google is up 8.74, up 1 3/10%. Amazon's up $8. Regeneron's up $6. To the downside here, we've got Hardware International off $16, 20%, nearly 20% to the downside. Ambarella off $11, down about 13%. So where do we begin? Let's begin. Got a number of questions. One, Larry in Wyoming sent me a chart. Sent me a link, wanted me to take a look at or gold and the Japanese yen. So we're going to certainly do that for him. But first, why don't we take a look at the ETFs? We did that yesterday, I believe. We started looking at the ETFs. Let's start off by taking a look at the QQQ series, since many of the stocks that we took a look at that were popping to the upside are inside the Qs. And what we have going on as we speak right now, I'm coming to you from, of course, World Headquarters, just kidding you about the World Headquarters thing, but it's about 10 after 1 on September 2nd out here. And as we speak right now, this chart obviously doesn't complete until the end of the day. You have a test of a swing point, the top of the swing point, which is the high from August 24th, that level, 102.53. And you have a test of that. That had, by the way, 150 million shares. Today is a test of it. It is thus far a rejection. If, in fact, price closes above 102, let's get rid of the, let me see here. I don't want to get rid of it. I can't get rid of it. Well, the easiest way. If it closes above 102, I was just trying to make it easier for the viewing audience at home. There is one way that I can do this. I can go ahead and put this on the bottom there. Not that it matters, but sometimes people copy our charts out here from TigerTV. So if, in fact, it can close above 102.53, you'd have a rejection on price and volume. Volume today so far, 25 million shares. No way it's going to have that kind of volume. What does that mean? It means if you can't bust them out to the downside, you try to bust them out to the upside. What does that really mean in the case of the QQQ series? Well, the first test to the upside inside the Qs would be the swing point here from August 28th. That's got 49 million shares, the top of which is 106. If you get above 106 with more than 49 million shares, price will most certainly, and when I say certainly, that means a high degree of probability, get up to 108.04. Actually, if it takes that level over with volume, you would have a to B equals CD to the upside out there. One thing at a time. the first key number that the Qs are going to be trying to poke their head through today, 102.53, hold above that level. If they do, it says you head up and test the 104.85 to 106 level. Above 106, we'll just have to measure the volume as that takes place out there. So that's what's going on inside of the QQQ series ETF. If we go take a look at the small caps, the Russell 2000, the IWM, what is it doing today? Well, the Russell 2000 continues to trade inside that August 24th swing point. It needs to clear 114.92. You're at 112.91 as we speak right now. That's what it needs to do. Its first level of clearance, if it can get above that area, but if it can get above that, it'll also close, well, potentially close the gap that was created between August 31st and Monday. Out here, we saw the IWM in essence gap down with 45 million. Was that Monday? That was Tuesday. 45 million shares. Today, you're up with 15 million shares. So the IWM is really struggling here. I mean, really sucking wind. If we go take a look at the SPYs out here, the SPY, right now that's trading out at 193.95. The level that it needs to clear to get the okay clearance out here is to get above 195.84. That is the top of that August 24th swing point. Yesterday, down with volume, 256 million shares, still lighter than the 507 million shares on August 24th. Today's bounce, 76 million shares, so even lighter than yesterday. The first level of, if it can clear 195.84, I mean the SPY, then what it ought to do is at least close the gap and test, I would say not just test the bottom of the August 31st level, which is which is 197.01. Very likely it would at least test August 28th, somewhere between 197.92 and 198.50. I think all that is doable. The Qs, the NDX, the composite, would be the one that would be the leader that could go ahead and lift the tide out here. So it is the Qs that we want to pay attention to. It won't be the IWM. It will not be the SPYs. If we go take a look at the Dow Diamonds out here, Lucy in the sky with diamonds, what we're going to find out is the Dow Diamonds are up with 4.5 million shares. It needs to clear the top of the August 24th swing point. That's at 163.45. That is a doable task today. If we're to do that, you would have a rejection of a swing point on price and volume out here. So 163.45 is the number. You're 162.57. It's still a decent move in order to get up to that level, but that is the area that you want to see it clear. If it does that, then the next time that you're paying attention to what the Dow Diamonds are doing is going to be at the most recent swing point high. Oops, come on, get out of there. Don't do that. What are you doing? What the heck was that? Let me see here. Okay, is the, well, that was also weird. That was a little multitasking going on. That is the high from August 28th at 166.62 out here. Key number, though, inside the diamonds, 163.45. So that takes care of our four ETFs. Again, the key level, I would have to say today, is really the Qs, because the others are sitting inside that August 24th swing point. If the Qs can't bust through it, close above it. When I say bust through it, close above it. It just says, lackluster performance, even though the numbers look large. 203 points in the Dow, 65 points inside the NASDAQ composite. And speaking of the composite, let's go take a look at the summation index, see what's going on inside the NASDAQ composite. Oh, very interesting. Is what Schultz, well, no, it's Artie Johnson, right? Artie Johnson, who was the first one to start? Very interesting. I don't even know. Did Schultz say that? Maybe he just said, I know nothing. So we'll go with the Artie Johnson out there, who would say very interesting. And it is very interesting because the NASDAQ composite price oscillator, it's above zero. And by being above zero, what does that mean? That means that the buyers are the ones that are in control of the session as we speak right now. The level that the NASDAQ composite needs to clear, and you're trading pretty much at it, 46.94.90. You're trading at 46.99 as we speak right now. That would then say that the NASDAQ composite, the Qs, are going to go ahead and probably go ahead for their most recent high a few days ago, potentially take that out and find resistance around 49.13 or 5,000, even Steven out there. Of course, let's go take a look at the New York Stock Exchange. The buyers lost control of the New York Stock Exchange yesterday with that push down, big volume push to the downside. But as we speak right now, at 115, we'll see that price oscillator just poking its head above that zero line. If, in fact, it closes that today, no matter how we take a look, it actually tells you that the buyers are the ones that are in control. We got a game that's shifting from hand to hand out there. If, in fact, the New York Stock Exchange can close back above zero, What you should see is a move to test that 10,256 area inside the NYSE. Easy to do on a Wednesday and a Thursday and a Friday coming into a holiday weekend out there. In fact, really the end of summer. For most of you, those of us that live in Florida, well, we have summer year-round. Come on out and join us out here. It's a great place to live. Inside the Dow, its price oscillator is not above zero, but boy, would that be some miraculous work if it could. I don't think that it can today. I don't think that it's humanly possible. I think most of the Dow stocks are in the green, if I'm not mistaken, out there. So we won't see that price oscillator get above zero. So there's not a whole lot to report on inside of the Dow. If we go take a look at the VIX index out here, you got the VIX trading out at $28.44. Well above that 50-day exponential moving average of 1895. That would be the ideal area for the VIX to move down to coming into this Friday. Maybe it's next Tuesday because we're off on Monday out there before it gives you your next sell signal inside of the market. So that covers some of the indices, the index ETFs. Let's call it a day and go to the beach, shall we? Waves are up, surf is up. So we ought to do that. No, I'm just kidding you. Let's go take a look at Larry's questions about the yen as well as gold. So the premise here is, let me switch back here. There we go. Let's go take a look at the Japanese yen daily chart here versus the dollar. What is it that we know about this currency pair? Well, number one, as Stevie pulls it back very far, you're going to see a nice little rising price channel inside of this currency pair, taking you all the way back into the 2012 timeframe. So price has been trading with inside a very nice rising price channel. We know that. It has not broken that price channel. Price came down and tested, in essence, a level of horizontal support set off by this little hammer candle right back here on the daily chart. That was on the trading session of March 26th. Now, if you take a look at that, price came back last week and did what? It tested the hammer candle. That's how strong that hammer candle is, or a hammer candle can be. Price came back, wide-ranging bar, no doubt about it. Came back, tested that level. Right now, what the Japanese yen has tried to do over the course of the last couple of days and has failed. It tried to get back inside a little shorter term trend, that little green arrowed line on my chart out here. Now, that's what it's doing on a daily basis. In order to prepare, in order to be able to honestly, accurately answer the question, is the Japanese yen trying to form a bottom here? If you were to take a look at this chart, what would you say? What would your answer be as you take a look at this? I don't know what your answer would be. I wish we had the two-way communication through this radio system of ours. But I am listening. I heard some of you are saying it's trying to make a bottom. Well, you know what's always good to do, no matter what, when you're doing something, when you're flying, when you are trying, what you should do out here is you should always take a look at the level above and below you. So if we're taking a look at a daily chart, that means we ought to go take a look at a weekly chart. And voila, very interesting. As Artie Johnson would say, when you take a look at last week's action inside the U.S. dollar, Japanese yen, we haven't seen a candle like this, a hammer candle, on a weekly basis. And Lord knows how long inside this currency pair. Well, I can tell you how long. Last time was in August of 2010. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow, she is up, well, I tell you, if I had it on that screen, 212 points. S&P is up 22. So we were taking a look at the Japanese yen versus the U.S. dollar. Now, I'm going to go ahead and flip the currency pair. Just flip it with regard to base currencies, because the premise here of the conclusion in the chart that was sent to me was that if we can find a bottom inside of the U.S. dollar Japanese yen currency pair, that maybe we're going to find a bottom inside of gold. So you can see the top chart here is U.S. dollar Japanese yen, the weekly chart that we're taking a look at. Remember, with the base currency pair flipped the other way, we took a look at a hammer candle. Well, on a weekly chart, you're looking at a shooting star. That says that you've got strong resistance. So just like in the case of the U.S. dollar Japanese yen, the way that you and I were taking a look at it, when we flip that currency pair, a hammer candle is a signal of potential strong support. Likewise, a shooting star is a candle of very significant resistance out there, or can be. If you take a look at the correlation with regard to this currency pair and gold, you can say, yeah, okay, maybe. You can see, you can't deny it completely out here. But I think another way to really take a look at gold is to take a look at it measured in other currencies. So if we go ahead and we switch over to that and we take a look at this, you're going to see the top portion of the chart. That's the euro. That's gold priced in euros. Center portion, that is gold priced in Japanese yen. Below that is gold priced in South African rand. And below that is the gold priced in U.S. dollars. So you got four different panels out here that we can take a look at. As we look at this, let's take a look at gold priced in Japanese yen. What we can see, let me just try to expand it out here. In fact, let me do it like this. It might be easier for you, for the viewers at home, if I actually just go ahead and expand it out. So let's do that. Let's turn on, there we go, we got Japanese yen. Let's turn off the South African rand for the moment, but we're going to look at all of them. As soon as I can find it here. Okay, we got this, we got that. There we go. So now on this chart here, you're looking at gold priced in yen and gold priced in U.S. dollars. If we take a look at both of them, what we can see here is you can see a significant level of resistance, right? We're talking about coming from the high of, looks like the trading day of January 22nd, 2015. Trend line. And what we're using here is the next high out here is right around May 18th. 2015. We can see that in both currencies, measured in both currencies, gold stopped right there at resistance back here on the trading day of August 24th. Now, what we can also see, you can see, so you've got that declining tops line. You can also see in both currencies, you've got a rising bottom. You can see the cone of silence. That came to us from none other than Get Smart. What was his name out there? Come on, what was that? It wasn't. That was the TV show Get Smart. But what, Don Adams, right? But what was his name? What was his name? In any event out here, I remember Agent 99. But if we take a look at this, you can see that price is Maxwell Smart. Thank you, Borer. Maxwell. If we take a look at gold here, you can see just traveling with inside a very narrow range. Maybe that's what you have to look forward to with regard to the price of gold here over the coming days. Just simply a narrow range with regard to trading. Do these charts tell us much? With regard to gold priced in yen, not so much. With regard to gold priced in U.S. dollars, we do know that gold broke through a level of support, which was the swing point back on November 7th out there. It's trading really right at that level, 1134. So it broke through a level of resistance or support, should be resistance. And I don't even know that that line is either acting as support or resistance right now. So let's just go ahead and kibosh it. Let's go ahead and get rid of it. Now, let's go turn off the Japanese yen chart, and let's go add to it. Let's go add the South African rand. So let's go do that. Let's put, come on, work for me here. I've got to do that first. Okay, so that's what I have to do to turn that on and off. Now, as we take a look at gold priced in rand, this is kind of interesting. What do you see here? You see that priced in rand, it's even weaker. There are many that have sent over the years have sent me a spreadsheet saying you really got to take a look at gold priced in yen. I mean, priced in rand out here. So there you go. Thank you for sending those cards and letters. And what we can see here is that gold priced in rand is weaker than Japanese yen, is weaker than the U.S. dollar because its trend line has not even been hit out here. What does that mean? Hey, you determine what this means. We're just taking a look at Goldilocks priced in different currencies out here. I don't think that the gold, now, is this trying to find some type of bottom out here? Nah, I don't really think that gold priced in rand is providing you and I with a whole lot of information. So let's go ahead and turn that thing off. Let's go ahead and add here, though, gold priced in euros. That is now the top portion of our chart out here. And we're just going to have to wait till we get back from the break. But I think that it's gold priced in euros that provides us with the most amount of information. Something to think about. How about that? We got Schultz. We got Maxwell Smart in there. We got everything. Thank you for being here. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, for a moment there, we had room 222 just to bring out all the old shows. The Dow was up 222, but it's up 205 points right now. S&P is up 22. We were taking a look at gold, priced in all kinds of currencies out here. The last one we were looking at was the euro. Gold priced in euros out here. Now, clearly, gold priced in euros has been in a nice little rising, rising trend line. I would have to say it's a rising price channel out here. We can also see that cone of silence, with regard to a little bit of a declining tops line out here. This is it's a daily chart that we're taking a look at. With regard to support, I don't know why I put that blue line there. That does not make sense at all. So we're going to go ahead and get rid of that. The actual line of demarcation for gold should have been really right up here. Here's a line of support and or resistance. So when we take a look at the highs back here in October of 2013, that blue line priced at 987 euros per gold ounce, you can see that level really acted as a strong area of resistance. And once it finally broke through there, price went up, made a to B equals CD to the upside out here, but really broke out. And that's what trading desks around the, in my opinion, that's what trading desks around the globe saw. This was back right around January, in the early part of January 2015. Now, price has come back to a level where it broke out from. You see that 987 area here? So I believe that gold priced in euros is providing you with way better information than gold priced in any other currency with regard to what traders are actually doing out here. Now, this is also telling us that we're kind of stuck in the mud. But if we can see gold get above that descending tops line priced in euros out there, that may start another initiation move of a wave of orders to the upside here. So I really believe that, it is priced in euros that you want to be focused on when it comes to Goldilocks. And at this stage here, this has not given, it's given us a nice little narrow trading range out here. But we don't have a breakout. And any level of support would be the bottom of that rising trend line out here. So, Larry, I hope that helps you out. As always, keep those cards and letters coming. Now let's go take a look at, we looked at currencies in one sense. We looked at gold priced in currency pairs out there. I know. How about that? I know. It was, what happened was, I snapped open that chart for the U.S. dollar Japanese yen, and we talked about that hammer candle out there. And a hammer candle is a beautiful candle configuration. And the reason is because it's a market that truly is trying to hammer out a low. Now, in the case of the U.S. dollar Japanese yen, this is a weekly chart that we're taking a look at. We have not seen a hammer candle form off of the lows back here in 2011. Now, as you know, when you break a hammer candle, when I say break it, I mean, you break it, you own it. I mean, you close below the bottom of a hammer candle. When you're long, you're wrong is the expression that I like to use. What does that mean? That means you go ahead and you fall back to the next a logical area of support. Could be a bullish reversal signal, could be a swing point in the case of the euro, get you down into the 105 area. But I'm not saying that's what's going to happen. We took a look at that daily chart out there, and we saw, let's just take a look at a trend line here on the weekly chart. Let's do that. Let's look at a longer term trend line out here versus what we did have drawn. And as we take a look at this, you can argue that even though it didn't get right down to it, where that hammer candle fell inside the U.S. dollar Japanese yen, very close to that level of support, that little trend line out here. You can see that we haven't gotten any follow-through, have not received any follow-through over the course of the last couple of days. That doesn't necessarily take away from the hammer candle. In fact, you like to buy, if you're looking to buy something with regard to just simply candlesticks and patterns that are completing at those levels, you like to buy somewhere between that midpoint and the bottom. The closer you can get to the bottom, the better off you are, because that, in essence, is your stop. You close below that, you just exit the trade. You just simply exit the trade, come back and reassess out here. Now, what's really interesting, because I didn't do this, I did this because I was trying to help answer the question with regard to gold price and other currencies. As long as I had my weekly chart up, I then said, because I hadn't looked at the weekly charts. I had not looked at, did you look at last week's weekly charts and you didn't tell me about it? Because I didn't do that. I should have done that. I didn't do that. You probably did. You probably noticed that inside the Dow, that it too formed a hammer candle. Now, that really is interesting for me. And it's interesting for you too. Why is it so interesting? Well, it's interesting for this reason. Take a look at coming off of that low back here in 2009, in March of 2009. This is a weekly chart that you and I are taking a look at. And what do we notice here? Price, just like we were trying to take a look at inside the Japanese yen, price came back into the trend line and formed a hammer candle, which is a beautiful thing. This doesn't matter to me which side of the market it is that you want to take out here. Instead, what I want you to do is I want you to take in the information, because it's a ton of information out here that's going to help you with regard to what the markets are going to do next. That low from last week, it is really important. If we take a look at where price actually fell to, interestingly enough, if you take a look at the last time we saw a hammer candle out here, it was February 27, 2014 on a weekly chart. Now, in fact, coming off of the March 2009 lows, we have seen 3 trace hammer candles out here. None of those weekly hammer candles failed. Tested, yes. The first test was back here, the hammer candle that was formed back in August of 2011. Fairly decent decline that we had back then. That was the European contagion. Now we got the Asian contagion that is out here. But in that European contagion, you can see that level was tested. It was rejected. In fact, it was so much rejected that it formed the next point for our trend line, which was the October 2011 low out here. Now, price, as you can see right now, trading at 16,260 inside the Dow is slightly below that trend line. Is that a good thing? No. That is absolutely horrible. And in fact, if you close below that level on Friday, it doesn't spell curtains, but let me tell you, it's itching and stitching to go ahead and spell curtains. Curtains will be closing below that hammer candle from last week. However, there are two other hammer candles on the way back. You can see the one that was tested right here. That was February 27th. There is one more, which is back on October of 2013. That October 2013 is really going to be the key level out here. And that key level price point, by the way, is marked at 14,719. 14,719. You see it close below that. If you aren't already out of the market, I'm not telling you to be short, but if you are not already out of the market because you're a long-term trader, do yourself a favor. Get out of the way. Get out of the way, because then you will have broken a trend line. You will have broken through these hammer candles. And what it will be reminiscent of is come on back here to 2007. Because you see, you had a hammer candle back on December 21st, 2007. That gave way a couple of weeks later. Wouldn't you have liked to have been out of the market after you saw price close below that hammer candle? Remember, if you're long, you're wrong when you close below a hammer candle. You got to know and understand where price is going to fall back to. Take a look at the next hammer candle on the way down. That took place the week of, what was it? The week of, looks like September 19th, 2008. You got to close below that 2 weeks later. Boom, you go down to the downside out here. We had one more final hammer candle that formed on a weekly basis back in 2008. I believe it was December 5th, 2008, week before, week after, and that's what took us into the lows of 2009, March 2009. So last week was really important out here with regard to the candle configuration, and I'm, ideally, you want to buy support, right? You want to see price come back to support, and in essence, buy that. And you like to see some type of, look, there's only one responsibility for buyers and sellers, at least for you and I, and that's to communicate to you and I. And the way that it communicates is with regard to candle signals. Now, hammer candle's not the only bullish reversal signal out there, but it is a really important one. And when I say come back to breakout areas, if we go take a look at what went on inside the futures market, this is a 5-minute chart here last night. 5-minute chart, I was sitting in front of my screen, and all of a sudden, the price just took off to the upside. I was like, where the heck did that come from? I was looking at currency pairs, and this was here at 8 o'clock last evening. And this is a 5-minute chart that you're taking a look at. Nice wide-ranging bar. Look, you don't always, volume isn't going to be the be-all to end-all. Neither are candlesticks going to be the be-all to end-all. We got to put all this stuff together, but it certainly identifies. You get a wide-ranging bar. I don't care what time frame it is you trade on. You've got to mark that as a breakout area or breakdown area. In this case here, it was doing some breakout dancing. And we can see that price came back and is tested. First, it came back this morning at about 4 o'clock in the morning, 4:30 to be exact, came down here and tested it around 10:30 in the morning. This area here continues to hold that support. Now, that doesn't mean that it's not getting slammed out here. We continue to see, because there was no volume. There was no volume at 8 o'clock last night. We saw a huge move. When I say a huge move, in a matter of 5 minutes, price inside the ES Mini went from 1918 to 1932. That's a big move. That is really a big move on what we'll call 5,600 contracts out there. So what are we doing right now? We're just kind of trading sideways. What's really key out here inside the markets? I don't know that we're going to get it between 1:40 and 4 p.m. I'll have to say it's going to be that low in that 1918-ish area, as well as the most recent high that is formed out here, which is at the 1941 area. Close above 1941, you probably got an A to B equals CD to the upside on a 5-minute chart. You close below 1918, you head all the way back down to the swing points. You'd head down to where we have volume, which is probably inside the 1907-ish type area out here. So that's what's going on. There's a 5-minute chart. We took a look at the weekly charts out here. They're really all the same. They just all blend together. You and I were looking for the same information with regard to what type of candlestick, if any, has been painted by buyers and sellers for you and I. Now, interestingly enough, when we take a look at some of the other markets out here, if we go take a look at the S&P 500 as an example, what we're going to see here, again, hammer candles. So you can see the same type of hammer candles along the on the weekly basis from the 2009 levels up to the highs thus far. It says that last week's candle is really important, but we do know levels of support out here. Again, that being the week of October 2014, October 17th, 2014, as well as at February 7th level. You get below that February 7th level, which is 1737. If you're not already out of the market, just simply get the heck, don't even question it. This is the time when you can possibly be most objective, is right now. You should be able to be most objective right now. And what would happen is, in fact, if the S&P, we'll just draw this trend line in like this, just to show us. And let's actually expand it just a tad, just to make it a little bit easier. Let's go ahead and just simply, we're just drawing lines. You don't have to be, you don't have to understand when I say things like Fibonacci expansion or contraction. You can say, what the heck is that kind of language out there? Just trend lines. Just let's keep it simple. The keep it simple Steve approach to taking a look at what's going on. If we take a look at, let's go ahead and use a little horizontal line here. What did I say it was at 17? Right about that. So here's the interesting thing. Right at the lows of that February 7th area, 1737.92. Now, I don't know when or if in fact the S&P will get down to that level, but if it does, you can see a convergence of a horizontal line of support, that hammer candle. Forget about the blue line off to the right. In fact, let me just do this here. I don't want to confuse you. That would be terrible. Let's just simply draw the line out here, and it looks probably something like about this. There we go, something right around 1737. So now we can see the convergence of a horizontal line of support, a diagonal line of support. The cool thing is at 1737, versus 2100, that's a fairly decent move out here. But here's the key. You break through those levels, and you ain't seen nothing yet. Who sings that song? Boy, who sings? Who sings that? In any event, BTO. Bachman, I should have remembered that. Bachman Turner Overdrive. Hey, you guys like the Guess Who? You should. Because, Bachman Turner Overdrive, that would be Randy Bachman who started that. You should actually go out. If you like music out there, you should go out and, in fact, I would never ask you to do something I would do. I've got Randy Bachman's solo albums out there. They're great. They're fabulous. So in any event, that's really reminiscent. Guess Who? One of my favorite bands. I have many favorite bands, and the Guess Who qualifies among them. In any event, out of here, use this area. Use these areas as places to consider exiting the market if, in fact, prices move down to that level. What we do know is the bulls are really trying to defend this level out here, and we'll see if they can continue to do so. There were other hammer candles. That was we didn't see hammer candles inside the New York Stock Exchange. So if we go ahead and we put that chart up on our screen here, let's do that real quickly. We won't see a hammer candle from last week. It might look like a hammer candle, smell like a hammer candle. What happened to price is it pulled all the way back down to its hammer candle. So there's a level of support. That's the February 7th area. So if we see a close below that February 7th area, price point, by the way, inside it is at 97.32. Remember, we were taking a look at the Dow. Let's just take a look at the trend line out here inside of the NYSE coming off the March 2009 lows. What you're going to see here is the same thing. It's a very similar setup to what you and I looked at in the Dow. Now, the New York Stock Exchange, it's the wider swath of the market, right? So it provides you and I with a ton of information out here. So in this case, we could actually say that if you take a look at the wider swath of the market, we only have one hammer candle to go ahead and contend with. Whoops, let me do this here. And that is going to be that low in February. And that low, by the way, let me see if I can give that to you in price point out here. That is at 97.3247. Well, you see a close below that, 97.3247, 97.32.47. I'm saying that so that I can put in the line number out here. That would be bad. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 191. And before we went to break, we were taking a look at, well, we've been looking at hammer candles. I see Jamie in Green Bay asked me, interestingly enough, if the S&P had a hammer candle on the weekly basis. He also asked about the daily. We'll go take a look at that momentarily. But we did cover the S&P, in fact, that it did form it. Now, not that patterns repeat. I would not want you to be in the camp that patterns repeat. I mean, just take a look at your day. You start off your day the same way. You put either your right leg in, your left leg in your pants. Or, I mean, you talk about rituals that each of us have and patterns out here. That's why you and I are pattern recognition experts. Now, what's interestingly enough is we take a look at the 2007 top that was formed inside the NYSE. We can see some hammers along the way, but what you and I can see is a trend line. We can see a trend line, that red diagonal line that went all the way up to the highs. And we can see that there was a hammer candle that formed on December 21st, 2007, that week. We saw a close below that. just slightly below that on January 4th. Was that the message to get out? Nah, because price really was running right into the trend line. But the next week, the trend line was tested. And the next week, the trend line gave way. So, folks, that's the pattern in 2007, 2000 and 2007. Here's the pattern that we're in right now. Let me go ahead and squeeze this a little bit. You can see we've got this hammer candle off to the left. That's acted as support thus far. You can see price coming down to the trend line. You close below that hammer candle, and that says curtains out there, right? Now, I don't know if it says curtains. What it does say is you've got lower price. To what extent the lower price goes? Well, I say if you break this trend line here, you're looking at lower price going into 2016. To try to give you the exact month and the exact day, I would not want to do that. I would not want to tell you that it's going to be in April of 2016. But it would be April of 2016 that you could anticipate the market going down if, in fact, these lows get taken out, if, in fact, these hammer candles get taken out. Now, if we go back to the S&P 500 for Jamie, we'll just go ahead and pop this on the screen out here. Not that I want to give you a forecast or anything or a roadmap out there, but you are listening to the Steve Rhodes, sponsored by AAA, the old triptych. Remember the triptychs from AAA out there? You know, now, I mean, those are history, right? Those are toast. You just look at your phone. I don't know what's going on with my system here, but it won't let me do. Oh, there we go. I can at least get rid of it. We'll go take a look at the S&P 500 another way out here. Give me one moment. Do we want to do that? No, I can't do that. So let's go take a look at the S&P on a daily chart and see what it might be that Jamie is looking at. He's looking at a hammer candle. Hammer candle a week. Last week, yes. On the daily chart was Monday. Monday hammer candle. Let's take a look at Monday's trading. This is the daily chart. Monday would have been what, August 31st? Here's August 28th. No hammer candle out here. The body of the first, the hammer candle is only going to occur when price is moving down. You could have what they call the hanging man candle. A lot of people think that's a bearish candle. I say gibberish, hogwash. Are you kidding me? But in any event, it's sometimes it's referred to as a bearish reversal signal. Markets have to be moving lower in order for there to actually be a hammer candle that would form out here. Here on August 31st, on Monday, you had the market going up. Even if you were really looking at August 28th out here, that too is not a hammer candle out there. So hopefully that answers your question. Now, with just a few more minutes to go, maybe like 20 seconds, what else can I tell you about the markets? You want to know what the markets are going to do. NYSE at 158 at 2 p.m., price oscillator back above zero. NASDAQ composite, price oscillator above zero. Dow can't get above zero today. Looks to me like the markets over the course of the next couple of days, they're going to go try to make a run for those highs from last Friday. And that is my take at 158. Stay tuned, though. Our man David White is up next. He's going to give you his best take as well. Have a wonderful Wednesday, and I look forward to seeing you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.